But first, let's talk about Jefferies because they've come out with some changes for their India model portfolio. Hormus is here to detail those for us. Hormus.
It's a very interesting note that Jefferies has put out, right? They have mentioned very categorically that the number of underperform recommendations in their note has doubled compared to the last time. It now has 10 stocks with an underperform rating, and that is in line with their near-term cautious view on the markets. Now, based on that, the brokerage is overweight on sectors like finance, on financials, consumer staples. That it's neutral on sectors like healthcare and real estate, and then it is also underweight on sectors like IT, energy, consumer discretionaries is where it is underweight, and on materials as well. So based on this, we have listed some of the new stocks that buy recommendations and underperform ratings that find a way in their model portfolio. ITC is one of them, where it is expecting an acceleration in its FMCG revenue for the current financial year, and it is expecting its EPS to grow at a 10% CAGR, which according to them is lower than peers but still reasonable in as per their standards, and the valuations for ITC are in line with their pre-COVID valuations as well. Now, the other one that finds a mention here is Zydus Life, where they're saying that the pipeline, the US market pipeline that the company has, is the best among the peers, and the street is not factoring in enough the potential that this pipeline has, which is what drives their overweight stance on Zydus Life. And the last one being Interglobe Aviation, where it says that it is positioning itself as a global player with limited competition, and it is expecting Indigo's EBITDA to grow at an 11% CAGR over FY24 to 27, and it is valuing the stock at 10 times September 2026 consolidated EBITDA. On the flip side, some of the high-flying names of recent times are driving the underperform recommendations on Jefferies. Dixon is one of them. The stock has rallied almost 150% in the last 1 year. That's what keeps them underweight, and also because of the fact that as a result of this move, it is trading at a very steep premium compared to its global peers, and any weakness in the domestic consumer demand will warrant some caution on stocks like Dixon. Tata Power is another one where it is underweight, where it says that they remain concerned on the execution delays and the renewable energy capacity expansion that the company has done, or the Odisha distribution business is yet to show any meaningful upside potential for the company, and instead they prefer NTPC and JSW Energy as means to play India's power sector theme. And lastly, IEX, where Jefferies is again underweight, and it says that it is facing this near-term headwind of competing exchange and this threat of market coupling that still continues to loom large, and if that happens, it will accelerate IEX's market share declines, and as a result of which it has an underperform rating with a potential downside of as much as 100 rupees from current levels, is what keeps Jefferies underweight on stocks like IEX. Back to you.
All right, some interesting names there. Thank you so much, Hormus, for getting us up to speed with what Jefferies is saying about some of their top picks and some of the top sells as well. Let's move on now.